What's up, everybody? This is Dr. Nick with 𝗪𝘁𝗰 Media, and I don't know if this is going to be a podcast episode or not, but if it is, welcome to Path to a Million podcast. The text of the Senate bill came out last night, and it was the first bill that I actually read instead of just reading news reports of what's in it. If you've never read a government bill, it's something. So anyway, I wanted to give kind of the most important pieces of information that I think most businesses are out there wondering about. So number one, the money that has been allocated, it's like $327 billion, I think, for small businesses, and most of that, I think they called it the keep your paycheck provision of the bill. But it's basically there to help small businesses. So anyone with 500 or less employees, which is, I would imagine, 99.99999% of chiropractors, that anybody under 500 employees will be able to get certain expenses covered by a loan, and then that loan does not have to be repaid. So it's relieved as long as you keep people on the payroll. So the way it works, I'm just going to read from it right here. And I think you could probably search for Senate bill text, and it'd probably pull up this document. But it says, in general, during the covered period, an eligible recipient may, in addition to the allowable uses of a loan made under this subsection, use the proceeds of the covered loan for, and this is important, 1, for payroll costs, 2, for costs related to the continuation of group health care benefits during periods of paid sick, medical, or family leave, and insurance premiums. So if you provide health insurance for your employees, it will pay for the insurance premiums as well as, basically the insurance premiums so that you can continue that health care coverage for your employees. Number 3, employee salaries, commissions, or similar compensations. I'm not really sure what the difference is between that and the payroll cost. Maybe the payroll cost is if you use a payroll company or your taxes that are related to it. Number 4, payments of interest on any mortgage obligation, which shall not include any prepayment of or payment of principal on a mortgage obligation. So if you own your building, the interest of that mortgage payment will be paid, can be paid with this money, but you can't use it to pay the principal. I saw I think it may just be a California bill, but some of the biggest lenders like Wells Fargo, US Bank, Chase, maybe Citibank, there were 4 big ones and a bunch of other smaller ones that were giving people relief on their home mortgages for the next 3 months. So I think if you reached out to your bank and talked to them, they may be able to work with you on the principal side of it. But this loan program is going to take care of the interest side of it. So if you're still in the first 5 to 10 years of your mortgage obligation, a lot of your payment goes to interest every month. Number 5, rent, including rent under a lease agreement. So if you are leasing your building, you can pay 100% of your rent payment with this. And then utility, number 6 is utilities. So anything that you have to pay, water, gas, electric. I would wonder if that would include internet as well. I'm not 100%, it probably says in there somewhere, but I'm not sure on that. And then 7 is interest on any other debt obligation that were incurred before the covered period. So basically, it talks a lot about before the covered period. So the start of the covered period is February 15th, 2020. So anything that you had before that is going to be eligible. You couldn't have gone out, you can't go out and get a mortgage right now and have the government pay for that mortgage. So I don't know how it talks about lease agreements, but I think that's probably just lease agreements for your actual where you your office building. I don't think that that's going to matter for if you've leased equipment, but I do think that it might. The interest on any other debt obligations that were incurred before the covered period. So if you have leased equipment in your practice, that may cover either all of that or part of that. Just kind of depends on how this is worded. So the way that 𝗵𝗏🊌 was talking yesterday, and the way that I understand it's going to work, is that you will be able to go into an FDIC insured facility, so like a bank, credit union, something like that. They will be able to, you'll be able to fill out the application like with your banker. And then once you've filled that out and the application has been submitted, that the funds will be available like the same day. Now, whether it actually ends up working that way or not, I don't know. But a lot of people have been complaining about the SBA website this last week because everybody's been applying for these disaster loans. That's a completely different system. That was through the regular SBA loan system. And if you've ever gotten an SBA loan, it can, like, not only is it a pain in the ass to get the application process done, like you usually have to pay somebody. Like when I got my SBA loan for my building, I think I paid like $4,000 or $5,000 for somebody to like basically shepherd my application through the process. It's like there's a whole like industry of these people that can help you with SBA loans. They are going to simplify this process. It's going to be much different. It's not going, like the SBA is funding it, but it's going through your local bank, and then the banks get fees based on how much money is lent. So they have incentive to help you out and get you in as fast as possible. And it's like quite a bit of money actually. Like I looked at the fees of what the institutions get. So up to $300,000 they get. It was like 5%, 4%, something like that. They get a lot of money for helping you get these applications filled out and get them submitted. So talk to your banker now, get something set up with them later next week, because they were saying that the funds should be available as long as it passes tomorrow. The voting's supposed to happen at 9 a.m. Eastern in the House. And they've got contingencies so that they don't have to bring the whole House back because everybody's on recess right now. So I think it'll pass tomorrow morning. I think Trump will sign it pretty soon after that, and then the money should be available next week. He was talking like late next week. So like my payroll is tomorrow. My next payroll is in 2 weeks. And so a lot of people have payrolls coming up, next Friday. So I think they're probably going to be trying to get that money in people's hands, as soon as possible. So talk to your banker now about maybe setting up an appointment on Thursday or Friday to go through the application process. The way that I understand that it's going to work is that you're going to have to bring in proof that you had payroll. So I can't remember what the names of the forms, like 941. I don't do the payroll anymore, so I can't remember what the quarterly payroll forms are, but you'll need to bring in proof that you had people on payroll before February 15th. And then as long as you've been in business over a year, the way that they're going to do it is they'll take 1 year of your 1 year of payroll, they divide that by 12, and then that's what comes up with the monthly payroll number that basically you're eligible for. And then you'd have to prove all those other things like your mortgage, utilities, just all the different things that are going to be qualified under here. And if you're just jumping on, make sure you go back and listen to what qualifies. If you have laid somebody off, like I was talking to a doctor yesterday that had already laid someone off, the unemployment insurance. Oh, before I forget, this is what I was going to say. You will be able to pay for, or you'll be able to use this money to pay your payroll. So all those things that I talked about earlier, you'll be able to use the loan money to pay those things, and then that money will be relieved. So as long as you can prove that you that you use that money to pay for these certain things, you won't have to pay that money back. They will relieve that money. If you use money to pay for other things, like to go shopping, you're going to have to pay that money back. And I think it's at 4%, but don't quote me on that. But that will the payroll will cover you for 8 weeks of payroll from the day that you get the money. So you'll have 8 weeks of payroll, and I would imagine if things are still disrupted and still closed 8 weeks from now, that they'll just have to extend it and put more money into the SBA. So so the stimulus package, not stimulus, the like emergency package is $2 trillion that the government passed, but there's up to $4 trillion that the Fed can use. So if things still aren't back to normal in 8 weeks and small businesses still need more money, I think they're going to be able to just take money from the Fed to put it into the SBA. So if I was going to say about the unemployment, if somebody has gotten laid off already, I don't think you have to like feel terrible about it, but normally the unemployment is 60% ish of like how much you make, especially if you've laid off like staff, like non chiropractor staff that maybe the salaries are in the $30,000, $40,000, $50,000 range. Those people will be able to get 100% of their salaries up to 4 months. So it was 3 months. They expanded it to 4 months. So the government paying for your payroll for people that stay on. So you have to keep them through June 30th. I think is another requirement, is you have to keep them through June 30th to be able to get those costs relieved. And again, they pay for 8 weeks. On the unemployment side, they pay 100%, and they pay up to 4 months. And I'm trying to think if there was anything else that like really mattered in this bill for right now. There's some small business grants that are available. I think there were some for like female-owned businesses and minority-owned businesses. I didn't get a chance to like go through all those sections yet, but the major points, the things that I think most chiropractors are out there and worried about is because the biggest expense for my practice, the biggest expense for most practices, I think, is payroll. So that seems like that's going to be taken care of in short order, and it'll be taken care of for the next 8 weeks. We'll see what happens after that. If I would imagine that it's probably going to need to be extended because I think things are still going to be disrupted 8 weeks from now. But that's just my opinion. I may be proven to be wrong, but yeah. So just to recap, the things that are covered are payroll costs related to the continuation of group healthcare benefits and insurance premiums, employee salaries, commissions, or similar compensations, payments of interest on any mortgage obligation, which shall not include any prepayment of or payment of principal on a mortgage obligation, rent, including rent under a lease agreement, utilities, and interest on any other debt obligations that were incurred before the covered period. So that one, I didn't talk about this earlier, but that would be, I think, is going to be any type of business loans that you have, that they'll pay the interest, not the principal. But again, I would talk to your bank to see if they can give you, if you need this, if they can give you an extension on the principal in the meantime, at least for the next month or two. I would guess that most banks would be willing to do that. So hope this helps. If you guys have any questions, be sure to leave it below, and I can try to maybe do a little bit more research later today. I've got kind of a busy day today, but I wanted to get that information out to you because I had a lot of questions on what the details were going to look like. So hopefully that helps, and we'll see you guys on the next one.